Have you heard the story of Michael Burry? The 2008 global financial crisis that crippled the lives of millions of people and almost took down the financial market.
Definitely a very, very difficult time.
Was actually a success story for Michael. Who knows, as history repeats itself this time round, any one of us could be the next Michael Burry. So what did he actually do? He rose to fame from betting against the US housing market and turned an $800 million profit. That's $100 million in his pocket and $700 million for his investors. But this isn't his first rodeo. Back in 2000, during the dot-com crash, he did the exact same thing. He bet that the price of these crazy valued companies would go much lower. Think of pets.com. That's the classic example. That company was pretty much a pet store with a website run out of a basement with a valuation of $290 million. Michael had seen these sorts of tech companies and went, I don't think so. So what did he do? He bet against them. He bet that the price would go lower. And in return, he got some crazy profit for him and his investors. What about more recently? In 2020, he predicted high inflation as a result of the government's actions during COVID, and that happened. In 2021, he warned we were in a bubble, and he was bang on the money once again. Since then, what have we seen? A landslide in stock prices, house prices starting to come down, interest rates starting to go up. But is he just another finance bro, or is this guy the real deal? Let's find out. Michael is a pretty controversial, and his favorite social media platform is Twitter. But if you blink, you've missed it, because the man deletes all his tweets. Enough about his life story. What do we know about his investments in the last 2 years? Well, for all you GameStop degens out there, you'll be glad to know Michael was an early investor and he cashed out before prices came crashing back down to earth. Go Mikey. Just cut that, we'll cut that bit out. Even more recently, Burry warned us of a market bubble on Twitter, and he backed that up by selling almost every single one of his stocks. He sold his positions in Bookings, Warner Brothers, he even sold out of tech giants such as Google and Meta, and these are generally seen as safe bets and high quality businesses. Now he's only holding one company, and that's Geo Group. But what do you do if you bought stonks at the end of last year and you're still holding? Well, you've got three options. Number one, you sell because your thesis has been invalidated. Number two, you hold because you don't know what the hell you're doing, where the markets are gonna go, or what's gonna happen. Number three, you buy. You buy more, you buy at a lower price, and your average purchase price comes down. And the only time you would be buying is if you have a thesis and that thesis still holds true. But his current view is best illustrated in his tweet from the 1st of October, where he says, another feeling I'm getting is mid to late 2000s. What does that mean? Michael, what does that mean? If we look at the stock market, and specifically the S&P 500, and we go back to June 2000, we'll see what he actually means is that we are right on the cusp of a full-blown market meltdown. Given he said mid to late 2000, we either have a 47% retracement or at best a 40% retracement. Given he said mid to late 2000, the good news for us is that we've only got 40 to 50% more to fall. Really, Michael? If we fall another 40%, we'll be doing everything possible to invest more in the markets. I say all of this, but at the same time, I'm not going to lie to you guys, I've actually been buying some. I've been nibbling at some of the tokens that I'm interested in and some of the stocks as well. So I bought Ethereum in June, back when price dumped below $1,000. A few days ago, I bought some Solana as price was entering $28 territory. And these are just to add to my long hold positions. I've even bought some Intel stock as well when price was at $25. If you're like me, just know that we are not alone. Our boy Michael is in the same boat.
One of us, Google gobble, one of us. We accept that one of us. Google gobble, one of us. We accept that one of us.
Just the other day, he tweeted that he, of all people, admits that he's feeling greedy. But fast forward a few days, and he's got another tweet out saying that he remembers feeling exactly like I'm feeling now back in 2000, right before the dump. So were my buys a little bit too early? I don't know. What do you guys reckon? When does Michael Burry think we'll bottom? Well, last week he tweeted 29 companies had a market cap of greater than $10 billion with an EBITDA of less than negative 100 million. But what can we learn from Michael? Well, luckily for you, I've looked far and wide. I've rummaged through Michael's rubbish, and what I've found will amaze you. We've got Michael Burry's strategy as written by him, and here are his top tips. I try to buy shares of unpopular companies when they look like roadkill and sell them when they've been polished up a bit. Management of my portfolio as a whole is just as important as stock picking. It's critical for me to understand a company's value before laying down a dime. I always protect my downside to prevent permanent loss of capital. I hope this gives you guys some perspective on how to trade the markets, and if you like this, check out this video on why you'll regret buying Bitcoin in 2022.